All right. Happy Wednesday, guys. Welcome to the Multifamily Freedom Chasers Financing Zoom. My name is Shelly Miles. I am a commercial mortgage broker and the co-founder of Adventure Commercial Capital, together with Jerry on the other side there. Dr. Charles is here. Hi, Dr. Charles. And today our main topic is lending options for commercial real estate. And Jerry, do you want to go ahead and take over?
Yeah, I can take over. So today's agenda, we'll go through the community ecosystem, and that is the Freedom Chasers ecosystem. Some introductions of who we are, and then we'll ask a few of you to talk about yourselves and introduce yourselves to the group. We'll go through the current debt market, which is ever changing, and then we'll talk about some different lending options for commercial real estate. And at the end, we'll have a question and answer. So I'm trying to let people in here as I'm talking. So the community ecosystem, the Multifamily Freedom Chasers. Those of you who are not familiar, I'll go through it, and it'll be a refresher for those of you who do know it. Sundays at 8 p.m., we have the activation Zoom with Trevor, Victor, and Marcel. Mondays, we have broker calls and broker talks with Pete and Ed, teaching you how to build relationships with brokers. Tuesdays, the napkin underwriting with Will, Aldo, and Ed. And then alternating Wednesdays, you have us going over the current debt market. And then we now have multifamily foundations with Avishkar and Andrea. And they just did their first one last week. And so they'll be alternating Wednesdays with us.
Yeah, that was a great Zoom, guys. It's every other week. I mean, the opposite week from us, and you guys should join them. It was an awesome first launch they have of that.
Yep. So the Multifamily Freedom Chasers community journey. Just some questions here to ask yourselves as you are going down this road of educating yourselves and things. Kind of three different options that you have is, no thanks. Thanks for the free education. Multifamily real estate's not for me. I'm guessing most of you, that's not the case, or you wouldn't be here tonight. Passive investor, I love multifamily real estate, but maybe you don't have time and you have extra cash, you decide to be a passive investor, and let others do the work. I know how to underwrite and vet passive investment opportunities, which is a good thing to know before you invest in someone's deal. And then your other option in this case would be an active operator, where you are actively going out and syndicating your own deals. And then a step above that is going into education, and eventually providing education. So go ahead and go to the next one. So who are the Miles? I'm Jerry, and Shelly introduced herself already, but that's my wife, Shelly. And that's two of our boys there behind us, JJ and Jordan in the picture. JJ is on the call here tonight and is always here to help us. But we are commercial mortgage brokers and the founders of Adventure Commercial Capital. We specialize in lending on commercial and investment real estate. We got started in this business about 3 years ago here, but really the story started way before then. I've always wanted to be a real estate investor. Always, watched Carlton Sheets growing up, the infomercials, and decided I wanted to invest in real estate way back then. As a young kid, by watching those infomercials about how to get rich and things. But we started a roofing company about 20 years ago. About I guess about 8 years ago, we started investing. And as we're investing, we got the runaround from the banks, and then also some commercial mortgage brokers or commercial lenders. Um, we had some of them not treat us real fairly. We felt like we were taken advantage of in a couple different cases, and so that got us to thinking. And as I was educating myself further on this industry, I found a company that actually sets you up in the business, to do this business. And we made the commitment to do that 3 years ago, and now here we are, lending on real estate, and business is getting better every day. And so we're here to help real estate investors to grow their net worth, their real estate portfolios, and trying to do it in a fair and honest way. So you can go ahead and move to the next one. Here's our contact info, emails, and then that's my cell phone number. I'm pretty good about answering my cell phone, and then you can also scan the barcode there, and I guess that's a barcode, right? Is that what you would call it?
Yeah, and it takes you directly to our website.
Yeah. So go to the next page. So who are you? Now, before anybody steps up to introduce themselves, I'll tell you that there's been business that has been done on this call. There's been people that have met through our local network and met each other on this call, and actually done business together. So it's important, put your information in the chat, introduce us here, step up and tell us who you are. But there is good players in here. There's people from all walks of life. I know quite a few people in here, and some of them you want to know, I guarantee you. So anybody that wants to introduce themselves, go ahead.
Before everybody introduce themselves, can everybody do me a favor? If you want to do me a favor, let me know in the chat. I have had a full house for the last couple of days, and I kind of dropped the ball on promoting this Zoom call. I mean, it was promoted on the site, obviously, but getting it out there better than I thought, better than I should. I didn't do that because we've been busy. Can everybody take a picture and post it, please, somewhere where everybody can see it? Share it, share the link. I'll leave it on this page here. I'll give you a few seconds if you guys want to help me out. Screenshot it, post it, do something. All right, thank you.
So, yeah, we do have a house full. We've got some of Shelly's aunts that have been here, her sister's kids, niece's kids, another sister. So we've got a lot of noise in the background. So if you hear things, that's what it is. So
thank you.
yeah. Anybody want to go ahead and introduce themselves? Go ahead. JJ, start us off. Tell us who you are and what you do.
I'll I'll jump in after JJ.
Okay. Yeah.
I was literally about to unmute myself anyways, but yeah, my name is JJ Miles. I'm 17 years old. I help people with their YouTube, and I also run my own YouTube channel that I'm doing pretty good on. And I just help my parents with this call because I can and I'm available right now. I'm trying to do different challenges with my YouTube business related. Sort of now is the challenge. I'm trying to turn a piece of paper into $10,000, which is really cool. I'm very I'm I'm known in this group, and I'm also known in the Legends group. And I'm just known. I like networking, and I do YouTube, so that's pretty much me.
Thanks, JJ.
Yep.
Go ahead, Mark.
That's great, JJ. To be so young and entrepreneurial and focused. I've got a 17-year-old, well, an 18-year-old. He just turned 18, and a 16-year-old. And so it's encouraging to see and hear your story. So I appreciate that. Thank you for sharing. So I'm Mark. I live in Los Angeles, California. I am currently invested in Cardone Capital on a couple of their deals, and now I'm looking to do my own deals. I've got kind of a team together. I'm building out a list of qualified, accredited investors as I look for deals, and then just, really looking to kind of partner with people, and especially people that have more experience than I do on those first deals on my own, or as part of a team, actually, not really on my own. But yeah, that's kind of what I'm looking to do. And so being a part of this just to gain as much knowledge as I can is always helpful.
Awesome. Well, you're in the right place. You're in the right place, Mark.
Thank
Great
you.
to meet you, Mark.
Yeah.
Thank you.
Thanks for
Likewise.
sharing.
Does anybody else want to introduce themselves? I
I'll
see
go.
some new people on here.
All right, Kyle, go ahead, man.
Let's go, Kyle.
Hey, my name is Kyle.
Oh, Kyle.
27. Live in Nashville, Ohio. Looking to aspiring multifamily investor. Looking in the Columbus market and also looking for people to work with in that market.
Awesome. Awesome. So Nashville, Ohio, is that close to Columbus, or?
It's probably 90 minutes north of Columbus.
Oh, okay. Gotcha. All right. Is that closer, I guess, to Mansfield then?
Yeah, it's probably like 20 minutes from Mansfield where I live.
Oh, okay. Gotcha.
Yep.
I actually had to drive to the south side of Columbus this morning, so
Oh,
it's a
really?
2-hour drive for us, but our 14-year-old bought a dirt bike from somebody on Facebook Marketplace, and we had to go pick it up this morning. So
Oh, okay, cool. You're in Kentucky, right?
yeah. Yep.
Gotcha. Nice.
So
I
all right.
also just getting started with a podcast as well. So that's one other thing I'm working on.
Awesome. What's the
Oh.
podcast about? Any particular subject?
Multifamily investing and just helping other young entrepreneurs get started in their business, trying to empower people to take
Okay.
the leap of faith and get started with a business or a podcast.
Nice. I like it. Thanks for sharing, Kyle.
Yep.
All right. Go ahead and
Thanks for
move on.
having me.
Go ahead and move on to the next slide.
Good to meet you, Kyle.
All right. So the current debt market update. And I did not change these numbers today. The Fed rate is unchanged. The 10-year Treasury is almost at 4.3 today. I think we're at 4.27 or 4.28 last I looked. The current rates obviously are up from where they were. I'm starting to see some more movement in the market as far as sellers kind of throwing in the towel and deciding, hey, rates aren't going to come down anytime soon. We need to go ahead and cut our losses. There's a lot of them having to cut their losses right now. We're seeing a lot of that. We're seeing a lot of people coming to us right now that owe more on a hard money or a bridge loan than what they can refi out of. And some of them, millions and millions of dollars that they would have to come up with to be able to refi out of their current bridge loan. So that's the kind of things that are going to be hitting the market over the next year or two if the interest rates don't come down. So just keep that in mind when you're shopping. There's going to be some, the problem has already occurred. We've had the hurricane come through, which is these rate hikes and the hike, the way the rates have gone up. So the hurricane or the storm has already happened. But the cleanup is going to take a while. And, there's a lot of unseen damage as far as, behind the scenes that people aren't seeing yet. So, the aftershocks of that are going to be coming out over the next couple years. And it's not going to be a quick process. It's going to be kind of a long, drawn out process. We're seeing a lot of hotels that are in trouble, and quite a few multifamilies that are in trouble as well. And the owners are really struggling to keep up, having trouble keeping up with paying their investors. So there's a lot going on behind the scenes that we get to see because people call us for help. And in a lot of cases we're not able to help right now. There's just no, if someone owes 8 million on a bridge loan, and their NOI or whatever is only allowing us to refi for 5 or 6 million, there isn't much we can do. So those are the shocks that are going to be felt over the next, I would say, probably the next couple years. What are our lenders saying and doing? They're being more cautious, especially on the bridge and hard money side. They're being a lot more cautious, where they used to, do 70 or 75%, of the purchase. A lot of them are dropping down to 55 to 60% of the purchase because they're seeing all these deals that are overextended right now, and they don't want that to continue to happen if the rates continue to go up. So those lenders are getting a little more sticky and a little more I guess conservative. And then we have our long-term debt lenders are just they can't go against their DSCR guidelines. So DSCR, most of the time is 1.2 to 1.3, 1.4, somewhere in that range, depending on the lender. And they can't really come off of those guidelines just because someone's in trouble. So good thing, lenders are still looking at deals. They're still picking up their pencils, and they're still trying to make deals work. So that's a good thing. But just know that the interest rates hiking the way they have is a bigger problem than I think a lot of people really realize. So go ahead and go to the next page. This is current Freddie and Fannie small balance rates. What we're seeing, kind of the best rates you can get through Freddie and Fannie is going to be a loan over 10 million that has 100% mission driven rent rates. So you could be probably in the 5.8 to 5.9 range on a deal like that. There's not a lot of deals out there like that right now, that is 100% mission driven. This here is the current rates for the small balance or small cap loans. So we're looking at, on the Freddie side, 2 to 7.5 million. On the Fannie side, 2 to 6 million of loan amount. Both of them will drop down to $1 million. Freddie doesn't like to as much, but Fannie will even more. But we turned rates over today for a multifamily in Texas, and we're 6.4 to 6.5. I see your question, Mario. Mission driven is if the rental rates are below the average rent in the area, that's considered mission driven because it's providing affordable housing in the area. So if all the rents are below the average rent, then you're going to have 100% mission driven rental rates in a property. So Freddie and Fannie are mission driven organizations. They're here to provide affordable housing. So that's a big thing when we're looking at quotes from Freddie and Fannie. Is if they're mission driven, we're going to get some better rates, usually quarter percent, 20 basis points, somewhere in there, lower, and they have different, step downs or whatever for the amount of mission driven. So, and that's actually, it changes per market. But Go ahead and go to the next slide. So, that's current debt market update. The main topic that we have today is just 7 different ways to fund commercial real estate. I try not to do the same thing every week. The current debt market changes every week. Our products in general don't change. And so we've been doing these Zooms for almost a year now. So trying to come up with new things every other week for the calls. A lot of it's repeat, but and then some of it might be real basic, but maybe some of it will be things that you're now hearing for the first time. So I hope so. But 7 ways to fund commercial real estate. There are more. This is just the 7 I decided to highlight today. Obviously the number one, everybody thinks bank financing. Bank financing at different times can be better or can be worse than the others. Right now, the banks are really tightening their belts and not doing as much. We've had a lot of bad news and a lot of bad things going on in the news and things, which makes the banks skittish. And then we have, different ones that have collapsed and things like that, which tightens their belts and things as well. But, the bank financing, can be customizable. The bank can kind of fit the mold that you need them to fit a lot of the time. So if you have a deal that is really not a fit for maybe Freddie or Fannie or CMBS or whatever, a local bank might be the best route to go. Banks like to deal with people that they already have relationships with. So if you have a small bank or, even a big bank, small banks are a little easier to work with on deals. But they're going to, value your relationship a lot of times, and they're going to try to help you depending on the bank, like I said. But they each have their own guidelines to sit and say, this is the way banks lend. I can't do that because every bank is different. But they can fund just about any type of commercial real estate products. So, and from bank to bank and even lender to lender in general, you're going to find, one bank might say, January of 2023, they might have said, hey, we want to lend on more hotels. Well, from January to June, maybe they now have 10 hotels that they finance in that time frame. Come July, now they have too many hotels on their books and they're not going to lend on hotels. So come July, they might decide, hey, we want to lend on storage units. And then they're gonna try to get some storage unit business. So the banks, a lot of them are always changing, but just kind of the way it flows. Agency loans, which is something that we really like when we're looking, at funding multifamily. They currently have the most favorable terms for stabilized multifamily that I've seen out there. Occasionally over the last couple years, there's been a bank here and there that would beat them out. But in general, even over the last 4 or 5 years, they've been had the most favorable terms. But saying that, they have limited flexibility in comparison to probably your local bank. So I talk about agency loans all the time on here. If you have any more questions about them, we can take those at the end. CMBS is another lending product that we can lend on a lot of different types of real estate. CMBS is commercial mortgage-backed security loans. So these they bundle together in packages. Once a bank or an institution will do a bunch of these loans, they'll bundle them into a package and they'll sell them off on Wall Street to investors. So because of that, they're one borrower isn't as important is like for an agency loan, they're going to make sure that all your I's are dotted and your T's are crossed in your personal life and everything else. CMBS, they can be a little bit more flexible on, for an imperfect borrower, I would say. But when you do a CMBS loan, a lot of times you can feel like you've been put through the ringer. It's pretty intensive as far as the underwriting and things and the questions they're going to ask you. Go ahead and go to the next slide. So another form to fund commercial real estates is life insurance companies, or you'll hear life co loans. These guys a lot of times like to finance the really nice Class A properties, and really any property type. When you see the biggest and brightest of the buildings in a city, a lot of times that's financed by a life insurance company. It's a good way for them and a stable way for them to hold money. So debt funds, hedge funds, family offices, or just individuals with a lot of money. A lot of our bridge lenders come from this. They do short-term debt. They take on more risk. If you've ever gotten a fix and flip loan, this kind of fits into that mold as well. There's some big fix and flip lenders that are, money comes from family offices or hedge funds. And then, a lot of our local, smaller lenders are just individuals that have some cash and they lend it out and do pretty well with it generally. So, and those can be, really flexible a lot of times. So, SBA is another good way to finance certain commercial real estate. We have a couple of hotels that we're working right now through SBA. These are usually real estate that has a business attached to it. So a storage facility can fall into SBA in certain occasions. Hotels, any business that needs a property to work out of will fall into that business, that realm as well. And SBA, you can get a lot of leverage. You can get, if you're using the 7A SBA loan, sometimes you can get into a property with no money down. So just something to keep in mind. I've seen where people buy businesses that have real estate with them, and they'll buy them and then they'll separate and sell the business off and keep the real estate. So there's a lot of different ways to work it. And, hey, what's up, Aldo? Been a while. So, I see David with the eyes looking around there. He's I know he's been looking for some and working on SBA stuff too. So, last but not least, out of our list I put together here, owner finance, can be the most flexible, and you make your own terms. And really in this marketplace, it can be, we don't get paid on owner finance deals, but it can be a good option in a lot of ways. If you got an owner that is able to be flexible in things. And there was a guy, I'm in Grant's real estate club, and we had a guy on today that was talking about that he had gotten a property recently where he just took over the loan from the seller with no money down. The seller wanted out of the loan wanted out of the property that bad. He just took the loan over with no cash out of his pocket. And so those deals are going to be out there. You got to keep your eyes open, but there's going to be some. We've been seeing over the last 2 weeks. I've seen some people that are in really bad situations trying to do refis, and there's just not there's no way to help them. So there's going to be some deals coming to the market. So go on to the next page. So what can you do today to be ready tomorrow to maybe KP deals eventually, or to the GP deals, be buying real estate. First thing, I hear these gurus on YouTube, and even Grant Cardone says it, is that my credit score don't matter. Nobody wants to know about my credit score. Well, that's because they already know him. When he bought his first few deals, he had to show his credit score to qualify for a agency loan, unless he had someone else that signed on the debt. But if you ever want to be able to sign on the debt or be a part of a GP team, make sure your personal credit's in order, because they're going to look at it. You need a 660 or better to qualify for an agency loan. Start working on your personal financial statement, your SREO, or your schedule of real estate owned. Your personal financial statement, list your liabilities and your assets. And as you list them, think about, what can I get out of my liability asset, and what can I put into my asset column, and start working it. And I guarantee you, the more you look at it, the better you're going to make it, because you're going to be conscious about it, or conscious of it. And start working on your bio, your personal bio. You're on this call tonight. You're getting educated in multifamily. So put in your bio, if that's all you have right now, put in your bio, part of the Multifamily Freedom Chasers community. You having trouble with the screen?
Did you see that just now?
Yeah.
Okay, well.
So get your bio together. I've had people that have called me, and talked to me about this before. And one person that had wholesaled like 50 houses over a 3-year period. And he was like, oh, I want to get into multifamily, but all I've done is these wholesale deals. And he didn't even want to tell me about it at first. And I'm like, you got to put that in your bio. I mean, that's real estate experience. Put it in there. Anything you do, real estate related, that's part of your real estate bio. Put it in there. Start working on raising capital, or even better yet, start making more money. I was talking to some of the kids' friends today, and they're talking about, our son bought a dirt bike. He's been saving his money, and he went and bought his own dirt bike this morning. And all the other kids are like, wow, how did you get so much money, and this and that? Well, he's been cutting grass for 2-3 summers, and he's never spent his money. And they're saying, oh man, I got to wait 3 years. I said, no. I said, figure a way out to make more money faster, and that's the same with us. If you want to do something big, figure a way out to make bigger money. And one way to do that is our referral program. We do have a referral program. I think we have a recording for that on the YouTube page now, right? So you can get on there and see how that works.
I'm not sure if it's on the YouTube page, but it's on the MFC Facebook page.
Okay.
Or recording part.
Gotcha. So, I mean, there's a chance to make good money as a referral partner, and all you have to do is introduce us to real estate investors. And when we close a loan with that real estate investor, you'll get paid. So go on to the next page. So Q&A, anybody has any questions? You raise your hand or just blurt it out. Go ahead, Aldo. Saw your hand.
Yeah, I couldn't find it on here for some reason. How's it going, guys? It's been a minute.
Yeah. Good to see that you're broke out of jail or whatever you was in there.
Oh man, I've been underground for a minute.
Yeah.
Oh man, it's good to see you guys. Yeah, glad to see all these updates, man. It seems like I've not kept up with the real estate market as much as I wanted to, but I see that rates are in the 6 to 7s right now with agency debt. My question is around, we've recently resurfaced after looking at, so many deals. There's a couple of deals we're eyeballing, but one of them is in senior living. And, we've been, I guess, told that, Freddie and Fannie don't deal with senior living assets in the non-recourse side. But I was wondering, I know that there is non-recourse loans for senior living deals. Do you know, I guess I don't even know what you would call them, agencies or vendors deal with that at all? Is it more of a HUD situation?
No, I mean, I would look. I mean, we have some different credit unions that we can work through with those types of things and see if any of those have an appetite for it. CMBS, maybe SBA, depending on the loan amount. SBA might be a viable option as well. Just depends on the loan amount. If your loan amount's over 10 million, SBA kind of is out of the question. CMBS is there as well. So
It's under 10.
yeah. So I mean, SBA is got favorable terms as far as we can get you a lot of leverage with SBA comparison to other programs. I mean, sometimes, if you get some working capital and things like that with it for improvements, sometimes you can get in with no money. But generally, general rules, 85% loan to value through SBA. So if you have a debt service coverage, if it's covering your debt. So
yeah. Okay. Interesting. All right. Maybe hit you up for some more questions later on, but
yeah, for sure.
Thanks, Jerry. Appreciate you.
Yeah, no problem. Thank you. Kyle, fire away, man.
Yeah, so I've got a couple of questions. The first one is on agency debt. You had mentioned that it's less flexible. Could you elaborate a little bit more on that, on why it's less flexible?
Yeah, agency debt. Aldo just said it. They won't lend on the senior living facilities, so they're strictly multifamily. They will do some mixed use. I think it's 30% or less or 25% or less of the total income. Has to be the commercial space. The agencies, they dig real deep on who the tenant base is. So if you're student housing, they don't like that as much. If you're in a military area, they don't like military housing. Any single employer that's going to kind of fill that apartment, they wouldn't like a single employer area. There's little towns in the Dakotas and in Texas and different places that have oil companies that kind of set up and really make the whole towns, and you'll see apartment complexes pop up. Agencies won't lend in them because it's such a high concentration of one company paying your bill. That's the main things. It's just the type of assets they'll lend on, and then how they want the income to look. So
Okay, thank you for that. And the other question I had was about SBA loans. What do they typically look like as far as like credit, like versus like a more institutional lender for?
yeah, like I was telling Aldo, the SBA, they're there to help promote small business. So if it is a property that has a business attached, you can get a loan for it. And there's two different types of SBA loans. One of them is a 504. It's more of a stabilized, kind of buy this big piece of property or a business acquisition kind of thing. Really strict guidelines. You're going to be 7.5% to 8%. And it some cases we can get that as fixed debt for 30 years. Not always. There's some SBA lenders that'll always be adjustable. But then you have the 7A program, which is more geared towards the business aspect. You can still buy real estate, but if you have to do a bunch of rehab on a property, you know, and it's more like kind of a bridge loanish kind of deal, where you're going to be, you know, more in the 11-12% range on interest rate, and you're going to be adjustable sometimes monthly. Every month your rate will adjust. You know, but the things with these, you don't have to have the net worth that you would with like a CMBS or a bank loan or Freddie and Fannie loan. You know, sometimes if you have experience, and I should, you know, hopefully Aldo's still listening in here. If you have experience in that space, like you do with, you know, the senior living, you know, they'll even go away from, you know, the net worth even more. Sometimes if you can show 20% of the net worth of the loan amount, you can get away and be able to purchase the property. So, you know, a lot more flexibility with those types of things with SBA than your basic, you know, CMBS or bank loan or whatever. You know, with those loans, with Freddie and Fannie, you got to have the net worth equal to or greater than the loan amount. You know, SBA doesn't require that. You know, they are going to look at your credit. They're going to look at your personal, all your personal stuff, but they're not going to be as stringent when it comes to the net worth, because they're trying to promote small business and small business owners. But they're, you know, that's they're mission driven as well, trying to promote small business. So, but then they also have, you know, if your net worth is over a certain amount, I think it's 10 million now. If your net worth's over 10 million, you're not going to be able to qualify for an SBA loan. So,
Okay. Well, I don't have to worry about that for quite a while. So.
yeah. Hopefully you will though, huh?
Yeah, I'll get there.
Yeah. So,
Thank you.
yeah, no problem, man. Thanks for being here. So, open for question and answer if anybody's got anything else. If not, you can move on. Go ahead. So, needed for a quote. This is the Freedom Chasers Zoom, multifamily Freedom Chaser Zoom. So this is what we would need on a multifamily quote. T12 rent roll OM is very helpful, not because we take our numbers off of the OM, but because it has address and has a lot of the property information on it. You know, a summary of what you plan to do with the property is really helpful, because it helps, you know, if you tell us, hey, this is what I'm thinking, this is what I'm planning to do with the property, this is kind of what I'm thinking I'll put an LOI in for, you know, and things we'll need as we progress with the loan, you know, and we go under contract with the lender, you know, SREO, PFS from your KP or your sponsor. So. Go ahead to the next one.
And if you guys do have a question and you didn't get to ask it, go ahead and put it in the chat, or you can still raise your hand.
Yep. So our next topic is going to be, how do lenders underwrite deals? And we'll be talking just kind of the ins and outs of actually the underwriting team. Who are these guys that sit back in their little dungeon and tell us no about everything and give us a hard time about everything and want to see everything? So we'll kind of give you an insight to who these people are and all that stuff. So. And here is our contact information. Once again, if you all want to take a picture of that, write it down, whatever. But
Yeah, and JJ, you can go ahead and throw it in the chat.
yeah.
So it's easy to click and save.
And I can't stress this enough, to plug into the multifamily Freedom Chasers community. This community is providing as much or more information and education and connections than a lot of these, paid programs that you might do. We've been a part of several of them. We've paid as much as $40,000 for a year-long mentorship, and I would say that we get just as much. You can get just as much information here on this as you would with that other one. So, not going to name names of who it was, but I will say that this free one, don't take advantage. Use it. So, and join as many of these calls as you can. And if you can't make the calls, check out the recordings. They're all posted on YouTube. So, and I see you here, Aldo. I don't know if anyone else is here, but do you want to talk about your call and what you guys do on Tuesdays?
Yeah, I'd be happy to. So on Tuesdays, we talk about the basics of underwriting and the most basic type of underwriting, which is napkin underwriting. So essentially, when you get a deal across your desk from a broker or cracks your wherever it is that you get your deals, how to quickly analyze whether it's a good deal or not. We spend a good bit of time talking about, the things that you need to know and understand in order to do that quickly. But then we also do some live quick underwriting and kind of explain and go through the process for you guys on that. I think it's a great little Zoom, and I've learned a lot from it, and a lot of people are learning a lot from it, just as they're learning a lot here. So we'd be happy to have you on Tuesday nights at 8. So thanks, Jerry.
Yeah, awesome. Yep, every one of these guys, I'm on as many of these as I can. And there's never a time I jump on one that I don't pick up something new. So it's good to be on all of them. So, all right.
Yeah, and don't be afraid to share your contact information and connect with each other. This is why we're having these Zooms as well, not just to education, but to connect.
Yep. Yeah. We got the pastor at our church, one of the coolest people I know. He's been there for over 40 years. He's, I think, 80 years old now, but you'd swear talking to him that he was 20. But just super cool guy. He's always saying from the pulpit in church, he says, your network is your net worth. And he says, I can tell you where you're going to be 5 years from now by who you're hanging out with today. And, one of the wisest old guys I know, just, and I take that to heart. So, and, being on these
he says,
calls,
show me your
friends. Yeah. Good.
He says, show me your friends and I'll show you your future.
Yep. That's right.
It's so true.
Yep. So,
well, thank you guys for joining. I will let you guys go with some music. You can dance if you want to. Turn that camera on and dance. Thank you, guys.